Hey guys, I'm on the road this week, but I wanted to get this video to you to kick off the investment week because we've got some exciting developments going on for income investors that are going to help you be able to grow your income for retirement. Now, when the coronavirus crisis first started, there were many companies that actually cut their dividends because they were worried about whether they were going to be able to continue to generate profit, and the companies needed to keep their cash as close to the vest as possible, just to make sure that they had enough money to keep their business running while they got through this uncertain period. Well, now we're actually entering a spot where many of the companies that cut their dividends are reinstating their dividends. So they're starting to pay shareholders again. And this is a great sign for us as investors, because when a company says, hey, things are going well enough that we can afford to pay our investors, and we still know that we've got a viable business, we've got plenty of cash coming in, and that's why we're able to pay dividends, that's a great sign of strength for these stocks. And so today I wanted to introduce you to 3 stocks that are reinstating their dividends, that are paying investors, and that can help you grow your entire retirement income. So let's take a look at these stocks that I wanted to show you today. And the first one is Weyerhaeuser, ticker WY. Now, Weyerhaeuser is actually a timber real estate investment trust, or REIT. As a REIT, it's required to pay the majority of its operating profits to you as an investor. And so this is a great dividend stock because the company is literally required by law to pay you income. Now, the housing market has actually been very strong. We've talked about that a lot here at the Rich Retirement Report, and that caters directly to Weyerhaeuser's business because they operate timberland, and prices for lumber have been moving higher, and demand for lumber as all these homes are being built has moved higher as well. Now, Weyerhaeuser actually suspended their dividend in May. They had a 34-cent dividend per quarter at that time, and they stopped paying in May while they waited to see how the coronavirus crisis would affect the economy. But just recently, they announced that they're going to reinstate their dividend, and they're going to be paying 17 cents a quarter in the fourth quarter. Now, that's less than what they were paying before, but at least it shows us that they're confident enough to start paying something, and that should increase over time. Now, the company is, with this new 17-cent dividend, you can get a 2.4% yield, which is really very strong. It's up there. It's well more than you could get from any savings account or any treasury bond, and actually very, very attractive, even just considering the S&P 500. Now, the thing that's exciting about Weyerhaeuser is that they're actually paying a 17-cent, what they call a base quarterly dividend, and then they're planning on paying an annual supplemental dividend, which will include additional income for investors that they basically save up over the years. So as their business grows, they'll save up this cash and they'll pay it out to investors once a year, kind of an extra bonus income. And they're expecting to pay that first one in 2022. So if you buy shares now, you'll continue to get the 2.4% yield, but you'll also be waiting for the company to pay a much bigger dividend, and the stock should trade higher as investors anticipate this bigger dividend coming farther down the road. So this is a great way to play the strong housing market and also the rebound in dividends that are being paid. Now, our second chart that I wanted to show you today is Estée Lauder, which is the personal care or makeup company. And as you can see, the stock dropped quite a bit when the coronavirus hit because people thought, with fewer workers going to work, that the demand for makeup would actually be lower. But as people are staying home, they're getting on Zoom calls, there's still plenty of demand for beauty products, and also just the personal health has actually been a big deal lately. People are trying to be more healthy as they stay at home, and many of the skincare products that Estée Lauder sells definitely cater to that market. Now, the company suspended its 48-cent dividend in June, but then in August, they actually reinstated the dividend because their business is doing just fine, and they reinstated it at the regular 48-cent rate. And then they actually increased their dividend to 53 cents, which will be paid in the next quarter. Now, this is a 10% increase in their dividend. So not only are they bringing it back, but they're actually bringing it back and increasing the dividend. And if you buy shares before November 30th, you'll receive that 53-cent dividend. Now, I expect Estée Lauder to continue to increase their dividend because they're earning so much money that they'll have plenty of cash to be able to pay it. Some Wall Street analysts expect Estée Lauder to earn $7 or more next year. Now, compare that to the 53-cent quarterly dividend that the company's paying, and you see that they have plenty of more income coming in than they're paying to investors, so that dividend should increase over time. Meanwhile, the stock is trading to a new all-time high, and I expect this trend to continue. So Estee Lauder is another great dividend stock for you to jump in right now. And then the final one that I wanted to show you is Darden Restaurants, ticker DRI. This is the parent company of Olive Garden, Longhorn Steakhouse, and as you can see, obviously they dropped sharply in March when the coronavirus crisis caused restaurants to shut down and really cut into the company's business. And this is when they suspended their dividend. So they suspended their 88-cent quarterly dividend in March. But then in September, they went ahead and reinstated a dividend. It's a smaller dividend. It's only 30 cents per share each quarter. But it still shows that the company is confident that they are making money, that they're going to be able to survive this crisis, and that they can continue to pay investors. Now, one thing that I really like about Darden is that they've got more than $5 per share in cash. So they've got plenty of cash to continue to pay dividends for a long time, even if the company still has a difficulty with the coronavirus crisis. But they're expected to earn $6.10 per share next year. So the company is earning more than enough to cover their 30-cent per quarter dividend, and we should see that dividend increase as the picture becomes more clear, as management becomes more confident in Darden's ability to continue to operate profitably and to even grow those profits. So I expect the stock to continue to trade higher. Meanwhile, I expect your income to increase over time with Darden. So these are three great companies that you can invest in right now that are reinstating their dividends. They're showing investors that management is confident in the overall business, and they're giving you a chance to grow your income and grow your wealth. So I'd love to hear what you think about these opportunities and anything else that's on your mind when it comes to your retirement, when it comes to the markets. We're going to do another big question and answer alert on Friday. So I'd love to know what your questions are, what your comments are, and you can send those to me at richretirementfeedback@stpaulresearch.com. I look forward to hearing from you, and I hope you have a great week in the markets. We'll talk to you soon.